From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hi there, welcome to the COB on this Monday afternoon, the 3rd of March. Nice to be here with you. I'm Nadine Blaney, and we do have quite the momentum in this market through the afternoon hours. We've got this intraday chart showing it all for the CBOE Australia Index, up by close to a percentage point, and that is where the session will end for the CBOE. We'll be keeping our eye on the S&P ASX 200 to see where everything lands at the end of, the 12 minutes or so it takes for the market to officially come to a close. But I can tell you, looking pretty good, up by 0.94% right now. And when we get to some of the sectors, looking good as well. I'll bring you there in just a moment. Let's get across these themes because tariffs are looming. I mean, that is really what will help drive markets in the coming days. Canada, Mexico, and China in the firing line coming from the United States. That has put a lot of pressure on iron ore. So we've got iron ore prices down around 6-week lows, and that's why the performance of the miners today looks pretty solid, all things considered. And of course, today, a lot of our obsession is still taken up with the reporting season. So a bit of a post-mortem with many of our guests. We've got some great interviews up online if you'd like to go take a look or a listen. If you are listening to this in podcast form, you'll know our website by now, ausbiz.com.au, and we've got a whole reporting season section. I think it's worthwhile to note that we do have E-minis, NASDAQ and S&P 500 into positive territory as we round out this Australian session here. Speaking of the Aussie session, what helped drive this market higher? Look no further than the REITs. Good day for the REITs. And as I mentioned yesterday, we discussed a couple of them, a number of them actually, I'd say, on the show today. The call goes live from 12 to 1 p.m., but again, you can catch up online. But all 11 sectors right now are higher. So that is the REITs. It's also the telcos. Telcos, one of the best performers. Telstra was named as one of our stocks of the day today. Also, Aussie Broadband, a bonus buy, and it is up by 1.7% to $4.02. My guest, Nathan Somasundaram, was calling them, defensive growth names. Here's a look in at the miners. We can see their BHP looks to close at $39.62, Rio Tinto $117.19, around about there, and Fortescue up a respectable 1% to $16.71. But MinRes really powering ahead, up by 5%. Now, the big four banks ending in positive territory. They were coming under pressure a little bit earlier on. Also worthwhile noting that Macquarie analysts expect those profit margins for the major Australian banks to fall between 1 and 2 basis points after that February rate cut from the RBA. We've got a lot of those banks passing those cuts along. And speaking of the banks and Telstra, today on the call, I did I said to Nathan, give us your best and your worst performer from reporting season. And David Lane from Ord Minnett also weighed in. Here's what they had to say.
And I think they're in a good, great spot. And, as the thematic works against the banks and money is coming out of the banking sector, you want defensive yield that's going to hold up in the weakening growth outlook. Well, the telco sector is a good place. So the money is rotating into large caps, and Telstra benefits out of that.
It really is a bank that does have a lot of problems. And interestingly, part of the problem that they've got is a very high cost base. So Bendigo was almost subject to the fact that they grew their business too quickly because their net interest margin is so skinny and their cost base is so high that it actually hurt their overall profitability. So, definitely the banking sector is not growing by a significant amount. It is has been an overpriced area. And, Bendigo is definitely one of those that suffered.
So that was 2 buys for Telstra, a hold for Bendigo from David Lane, and a sell for Bendigo Bank from Nathan Somasundaram. If you'd like to listen to that stock of the day analysis in its entirety, it's up online, or you can go to our YouTube page and find it there. All right, let's get across some of these top corporate stories. Again, pretty quiet in the wake of reporting season, but a number of brokers weighing in. And I thought Medibank Private, we saw UBS hiking its price target on the scope for margin growth. PEXA Group, Morgan Stanley rated it positive after its first half earnings beat. Jefferies says that Endeavour Group needs a permanent CEO ASAP. And a bit of news from Medicus. It's inked a 7-year contract with LucidHealth, valued at $40 million. That's in the US. And Clarity getting hammered today after it reported a bigger loss of $23.5 million in the first half before market close on Friday. We've got Acusensus gaining on a Transport New South Wales contract. X2M Connect jumped on an AI product launch, although not being reflected here on the trade going through SIBO. And Synlait Milk, market responding really positively to the appointment of a new CEO, Richard Wythe, take effect on the 19th of May. All right, let's get some analysis on the day that was and what's to come this week as well. Josh Gilbert from eToro. We don't have Josh Gilbert right now. That's okay. Let's go back to some of the big stories of the week that was today. We've got Ballymore Resources jumping on starting drilling at its Queensland project. Also, we've got NRW Holdings dropping the most in 2 years. It had a half-year earnings miss, also in a little bit of focus as we start to see that Whyalla Sanjeev Gupta work running through some of the system. And we've got, again, a bit of a jump coming for X2M Connect. So it's had an AI product launch. It says the new product will significantly increase the company's recurring and software as a service revenue, and SaaS revenue is exactly what we want to see for a lot of these smaller software companies, of course. I did mention that Macquarie Bank, it says that the February rate cut will likely weigh on the big banks in terms of their net interest margins. We've got, it says the market to continue to focus on margin expectations, which Macquarie reckons are too high and are likely to lead to further share price headwinds. So it feels as if the earnings cycle for Australian banks might well and truly be over. So there's plenty for us as market participants to digest today. And I will note that Jefferies has upgraded Harvey Norman to a buy and has also lifted its price target for the stock alongside Macquarie. All right, now let's go to Josh Gilbert, who is joining us from eToro. Nice to see you, Josh, on this Monday afternoon. So what's the news for you today? I mean, globally, so much happening, but it's crickets around here, given reporting season is over.
Yeah, hey Nadine. Look, always a very busy couple of weeks, I guess we could say, whenever sort of reporting season sort of kicks off, and then when it ends, it does feel like it does get a little bit quieter. But look, a great start to sort of markets this week. You know, the ASX sort of having its best day for almost a month. You know, every sector in the green, as you mentioned, energy stocks sort of leading us higher. That's on the back of sort of oil rising a little bit after, you know, the sort of the Trump-Zelensky sort of row. You sort of basically means that we're probably not going to see those sanctions ease, and oil sort of lifted there. So pretty positive starts to the week. Again, it came off what was a very, very weak week for the NASDAQ, down about 3.5%. But ultimately, the S&P 500 picked up on Friday, better than expected PCE data, sort of squashed some of that CPI data that we had previously, which maybe, you know, gave some concerns to investors over inflation. So a lot to watch this week still, though. We've obviously got sort of US jobs data on Friday, GDP in Oz on Wednesday. And also, you know, Trump is back in the mix with crypto as well. So he's keeping us on our toes, that's for sure.
Yeah, all right. So we've got copper rising on the weaker dollar and strong China data as well. Throw that into the mix. Gold still in a bull run. I've been speaking to quite a few guests over that. And then we go to crypto, because this is interesting. It was all a bit of a fizzle after the initial run-up in the wake of the inauguration, with Donald Trump promising very crypto-friendly regulations. And then over the weekend said that he was confirming that there will be some sort of a strategic reserve when it comes to crypto. But were you surprised that it's looking beyond Bitcoin and talking about other coins like, you know, Solana, I think was even mentioned, Ether? Like, what are you making of this?
Yeah, look, it was quite interesting that he wasn't, straight away speaking directly about Bitcoin and Ethereum. He could sort of, in the tweets or whatever it was on his sort of social media that it is, or his post, I should say. He then quickly sort of commented on sort of Bitcoin and Ethereum, still sort of, key points. I think the big part here for me with Trump is that, look, I feel that if we do get sort of key levels broken. So at the weekend or sort of on Friday, we broke about $80,000 for Bitcoin. The point here is now that Trump has an invested interest in these assets. So his business, everything else sort of related to it, they own sort of millions of dollars worth of these assets. So for me, it's going to be something that I think is going to be a continued continued thing that we will see. He will keep supporting assets like this. Again, we've always had that conversation around a strategic reserve, but it has been obviously a bit more prominent now over the weekend. But yeah, it was a bit of a surprise to probably see some of those smaller assets included. But again, he owns some of those assets. We know he owns Solana. We know he owns Cardano as well. So that for me is was pretty interesting. But I think what it does go to show is that this is going to be something that happens with crypto over the next year. We're going to continue to probably see a fair bit of volatility. It actually came at a time when Bitcoin's volatility dropped to sort of almost near record levels. So I think it's pretty important to sort of zoom out. I think it sort of shows that, if you're going to be in crypto assets, not to let emotions or short-term volatility sort of cloud that, ultimately longer term view, because, with a new US president that is clearly very positive on crypto assets, it's hard to sort of really go against it right now.
Safe to say, though, I mean, I know we had a strong session on Friday. But that the direction of the market in the next couple of days really depends on the tariff conversation.
Yeah, absolutely. Obviously, look, that's the key uncertainty in markets, and obviously that's why we've seen a fair bit of weakness sort of coming through. Throw sort of geopolitical tensions in that mix as well. Obviously, that row that we had from Trump and Zelensky as well. Those types of things. It is all this sort of cocktail that isn't a very nice cocktail right now, and we've obviously had a great couple of years for markets. So a little bit of weak macro data thrown in with those sort of tariff news, it is sort of shaking markets a little bit, and ultimately investors are taking a little bit of cash off the table, right? We're seeing the money come out of some of those bigger names, in the AI AI movers, Palantir sort of really getting sold off pretty hard. The Magnificent Seven sort of drawn down about 10% from highs. So, I think that it's fair to sort of see some of that profit taking coming through, given the run that we've seen in some of those names. But yeah, tariffs will sort of remain front and center, particularly with China, with obviously the NPC Congress this week as well. That's going to be really important. It'll be interesting to sort of see how, if we get any conversation from them in terms of how they're ramping up investment and if they're going to sort of encourage businesses to sort of spend, because we probably expect them to sort of put that 5% growth target there again. But if they're going to do that, we're going to need to see greater fiscal spending to sort of meet those targets. So a really interesting one this week, obviously, with those 10% tariffs, if they're going to sort of be implemented this week, and obviously the Canada and Mexico tariffs as well. So I think that will still drive the conversation for the week ahead.
Quarterly is pretty much over in the United States. We do have non-farm payrolls on Friday. What else are we looking forward to in the US?
Yeah, I think non-farms will probably be the dominant focus, to be honest. We're looking for about 140,000 job additions, unemployment rate set to sort of tick up slightly to about 4.1%. I think if we get a cooler number there, it should sort of give investors a little bit of confidence. We might see a bit of positivity back in markets again, because that PCE number that we had on Friday was a little bit better than I think markets were expecting. We braced for something a little bit worse than what we got, which is pretty solid. Again, the way we're sort of looking at things right now, we're probably not going to be expecting rate cuts from the Fed until the back end of the year. So I think if we do get a cooler than expected labor market coming in the US, should be pretty positive. I think that will lift rate cut expectations. And then, as you say, reporting season, earnings season winding down a little bit. Still a few names to sort of come through. CrowdStrike is probably one of the biggest names coming through this week. Always gives us a good read, the sort of the biggest cyber name really. So it gives us a good read there on sort of how that sort of sector of the market is holding up. And it comes back to sort of everything really, spending, enterprise spending, that type of thing. A lot of spending is going towards AI at the moment, but with AI becomes the need for more cybersecurity. And I think that's where we're going to see CrowdStrike benefit. So probably the biggest name on the sheet this week for earnings.
Well, thank you for joining us, Josh. Nice to see you. Have a good one.
It's a pleasure, Nadine, and you.
Josh Gilbert there joining us from eToro. Well, the market leaders today, Kelsian Group, Johns Lyng, Boss Energy, Qantas, and Mineral Resources, which put on 5%. The laggards today, some of the worst performers in percentage terms, Clarity Pharmaceuticals, NRW Holdings, Suncorp, Volt Minerals, and Domino's. In the small to mid-cap space, leaders being Strickland Metals, Biome Australia, Gorilla Gold Mines, that came up last week in the trade with Jonathan Takadina, up by 9% to 34 cents per share, and Levato Resources, along with Appin, on the list. Flipping the page though, Race Oncology down by 10%, Somnomed off by 8.8%, Bhagwan Marine, Viva Leisure, and Comet Ridge, all down between 8 and 10%. Tonight, we do get U.S. construction spending for January. Really interesting in the context of a conversation I had with the investment committee. We've got a new episode dropping tomorrow. Hope you can join us for that. And tonight, the U.S. ISM Manufacturing Index as well will be a really important one to watch amid signs of slowing in the U.S. economy. Tomorrow, we're hanging out for RBA meeting minutes. So what was the conversation like around that rate cut that came through? We also get some finance statistics for the December quarter, the balance of payments, and we get retail trade for January. So just to recap what happened here locally today, we had a bit of a dip after initial bounce in the morning, but then steadily through the afternoon period, we saw this market coming back to life and closing up very solid, as you heard from Josh Gilbert there, the best performance it's put in about a month. Of course, we've seen plenty of headwinds facing this local market. So, the narrative is that I guess shares are clinging to some sort of hope for some tariff release coming through, even though we've got Donald Trump and his people saying that those tariffs against Canada, Mexico, and China will come into effect come Tuesday. We've also got, talk about this new cryptocurrency reserve in the US helping to drive crypto, including Bitcoin. NASDAQ 500 or NASDAQ and S&P 500 futures they're mildly positive, I think it's fair to say. And then, of course, we're keeping one eye trained on Europe. We've got European leaders agreeing to draw up a Ukraine peace plan to take to the United States in the wake of that clash between Volodymyr Zelensky and the US President Donald Trump in the Oval Office. So that will help drive some of the narrative as well. And it appears as if so far, investors are choosing to see the positive, or at least thinking that there could be some sort of a positive outcome on that front. Let's hope. Well, that's it for today. You can catch up with what you may have missed online at ausbiz.com.au. And if you're listening to us on podcast form, it's been nice to have you with us. We'll see you or hear you tomorrow.